When it comes to real estate and mortgages, sometimes it seems like we have our own language. There are several commonly used acronyms that may be unfamiliar to a lot of people. So I'm going to go over some of these with you. The first one is the MLS. That stands for Multiple Listing Service. And so as a realtor, I belong to my local MLS. And the MLS is a software that we use that allows us to input our listings, search for listings, see what went under contract, so on and so forth. So it's basically a database for real estate agents. The second term is HOA, and that stands for Homeowners Association. Sometimes it can be referred to as a POA or Property Owners Association. So anytime a subdivision, if they have a lot of restrictions, if it's a gated community, typically they're going to have an HOA. And those usually have dues that have to be paid on a yearly basis. So that's what an HOA is. We don't have a ton of them here in Morristown. Most of them are going to be in our lake communities. Third one is private mortgage insurance, which we typically call PMI. So if you don't have a 20% down payment to make when you purchase a home, then you're going to be paying for private mortgage insurance. It's an insurance policy that benefits the lender if you were to default on your loan. Number 4, APR, which is your annual percentage rate. So the annual cost of borrowing money, including both the interest rate and any additional fees or charges. So one thing that throws people off a lot when they're financing a house or refinancing a house is that your APR is always going to be higher than your actual interest rate. And I know back when I did mortgages, people just could not understand, well, if my interest rate is X, then why is my APR higher than that? And again, it's because the APR takes into account the cost of borrowing the money. So let's say you were doing a $150,000 loan and your closing costs were $3,500. They're taking the $150,000, subtracting out the $3,500 in closing cost, which would be $146,500. And they take that amount plus the principal and interest payment they've quoted to you and your 30-year term, and then they use their little equation to solve for what your APR is. So the APR will always be slightly higher than your actual interest rate. DTI, that stands for debt to income ratio. And that's a calculation that compares what you pay out monthly on your debts to what your gross monthly income is. They use that number to determine your ability to repay a loan. So obviously if you've got a huge car payment that throws your DTI off, that can keep you from qualifying to be able to purchase a house. LTV, that stands for loan to value. And typically we're going to talk about a loan to value ratio. We'll talk about 95% LTV, 80% LTV, and that just means 80% of the purchase price, 95% of the purchase price. They look at how much money you're borrowing versus the entire purchase price. FHA. We talk a lot about FHA mortgages. That stands for the Federal Housing Administration. That is a government agency that insures mortgages and provides assistance and financing options for home buyers, particularly those with lower down payments or credit scores. VA, that stands for the Veterans Affairs, Department of Veterans Affairs, a government agency that provides mortgage loan guarantees and other benefits for eligible veterans, active duty military personnel, and their families. So when someone's talking about doing a VA loan, then you know that they or someone in their immediate family, like a spouse, has been in the military. CMA. So a lot of times sellers will call us up and they'll say, well, what's my house worth? And I'm like, well, I'm going to need to do a CMA to be able to determine that for you. And a CMA stands for Comparative Market Analysis. It's a report that your local agent is going to prepare that looks at other homes in your subdivision and your immediate area that have sold to determine what your home would be worth on the market. The last one is PUD, Planned Unit Development. And so a PUD is a residential development that combines different housing types such as single family homes, townhomes, and condos, and they're typically going to have shared amenities and common areas. So, hopefully, this video helped you to understand some of the lingo that we use. If you've heard an acronym or a term from your real estate agent or from your loan officer that you're not familiar with, leave it in the comments and I'll be sure to answer you and let you know what that means.